a rare voice on ET now, and that rare voice is none other than Sanjay Agrawal of AU Small Finance Bank. He's rarely seen on TV, but every time when he comes on ET now, well, he's expected to really give a big picture about the macros and then a myopic picture about where AU Small Finance Bank as a franchise is headed. 2024 was a year of twist and turn for the franchise. The acquisition which they've done is taking some time to seep in, but that really could be because of what is happening to the MFI space. So what are the plans for 2025? How are they looking at streamlining the acquisition, and what about the core business in the light of where the credit cost and where the liability franchise is moving? All that and much more with Mr. Sanjay Agrawal. Sanjay ji, so nice to have you on ET now. First, let me extend best wishes for 2025 on behalf of everyone.
Nikunj, a very happy new year to you, your team, and your viewers. It is my pleasure to be on your channel. It is always because we share some commonality around our demographic and all those things. I've been from Ajmer, you've been from there, right? So thank you for hosting me here, and once again, very happy new year.
I always say that we have this bro bond.
Okay, yes.
Let me start with your view of the economy, because now cracks are opening up. For the quarter gone by, the data, which is high frequency data, car sales, CV sales, MFI space, the data was not that impressive. Do you think the economy is slowing down, or what we saw for the quarter gone by in last 2 quarters was a one-off?
Yeah, so Nikunj, my take on the subject is this, that if you see post-COVID, right, we had a wonderful run around everything in 2021, 22, 23. So 24 in relative term remained tough, and we know the obvious reasons, because the country was in election mode, then the inflation was high, there was some slowdown around the whole policy initiatives. But, and then of course, people expectation is too high nowadays that we have to be performing every day, every quarter, So I think if you ask me, things has been slowed down, particularly in quarter 1 onwards for this calendar year. But I would say that quarter 3 remains a little bit hopeful. But in December also, the things has been a little bit slowed down. But I think we should not overread this. Again, I strongly believe that our whole system is in place, whole infra is in place, the sentiments are there. So it will be sooner, maybe next year, next financial year, I believe that our performance will be much, much better than what we are doing in current fiscal year.
So do you expect the ratios for AU, which is credit growth, NIMs, margins, everything will expand?
So this again, because if you are into a cycle where interest rates are also, because we also has become a large balance sheet now, right? So I don't think that whatever we have, envisaged in the beginning of the year that we might grow in the range of 25%, can be a slowdown there also, but not much, I don't expect that would be lesser than 20%, right? Maybe in between 20-25%, our growth will happen for asset, for liability. Of course, NIMs will be protected because we have managed our cost of money well. We have really worked hard on our entire OPEX piece. The only challenge can be around the credit asset quality, which is also because it's a cyclic business, microfinance we just acquired, and unfortunately in the first year itself, we were anticipating it, in a larger period of time, but it just happened in our first year. But it's fine because, if you want to build a bank, it has to be very holistic. Every stakeholder has to be respected and it has to be served. So in that sense, I would say, our numbers, would be largely there, but, it's still 3 months to go, and, anything can happen because, if things can go bad in 3 months, things can also become good in 3 months.
What looked like a perfect fit, Sanjay ji, when you acquired the microfinance business has become more like a pain point and something which you also referred to. How much more time will it take before the MFI business really blends in into AU?
Nikunj, I would say that we have acquired that business with our full, I would say, eye open and everything, because it was not that rash kind of decision. And we were very, I think I was very vocal in communicating that why we want to have that business, because bank has to obligated to, do a direct agri financing of 10%, indirect agri financing for 8%. And that book allows us to do that. And if I have to take the safest route to do that obligation done, it has to be more around microfinance, because other books I don't think give me that kind of comfort. And we were very clear in our whole communication that we will be actually creating a 3% buffer as our NCL cost. So that was also there. And we thought that the whole cyclic effect will only come in next 3 to 5 years. Unfortunately, it has arrived in first year of our operation. So there might be a little high credit cost this year, but I strongly believe that the kind of action the industry has taken, the kind of right recourse industry has taken in next 2 3 years, it will again come down in that range of 3%. So, that time our acquisition will be more, in terms of right than wrong, as of now. And because December data has given me a lot of hope that the pain is nearby, the end of the pain is nearby, right? Maybe quarter 4, maybe quarter 1 of next year. But it is not a large pain, right? It is not a very kind of, movement done by any other stakeholder. I think the industry has to blame themselves, because if you are funding customer without understanding them, or you are doing over leverage financing to customer, then you have to go through this pain. But I think that much correction has happened in last 3 to 4 months, and I strongly believe that the pain is relatively lesser and should be over in maybe next 2 quarters.
I'll pick up a leaf from your answer that 2024 was slightly softer than the last 3 or 4 years. What was so different about 2024 which you think may not repeat itself?
I think very important question. I think the kind of euphoria as a society we always want to believe or want to carry on year need to be adjusted, because if there are good 3 years, 1 year will go down. I think we had a very bad time around our inflation, and I think I echo the regulators' view that if inflation is out of the comfort zone, we can't focus growth. And I think because in the longer run, people need to have very affordability around their lifestyle. So we have to go through this kind of, I would say, adjustment, and of course, now the policymakers and everybody is, I think, thinking through. And I think I would say that this is the consistency which we are looking into it, because we have got to a different size in our now entire GDP or entire our size of economy. We need more consistent and more relative measures so that we remain consistent in our forecasting, right?
You are growing at a rate which is double than that of the industry average. So are you growing because your base is low, or are you taking higher risk, or are you adding new customers, or is it market share gain? What is the secret sauce here?
I think everything, because we just acquired FinCare, so we are getting now South market. So next 2 years, the South market should allow us to expand. We are also expanding our product range. So we were just doing retail when we started the bank. Now our commercial banking piece, our credit card, MFI piece has come in. So that will expand our growth, and of course, the kind of market we are going into it, because the base is also getting changed. So I don't think that we are taking extra risk in an entire, piece, because if you see our data, in terms of our asset quality, it still remain very strong, be it retail asset, be it commercial banking, might be an abbreviation around credit card or maybe around MFI, which we need to learn and execute.
But for most of the categories, Now delinquencies have started higher. Credit card, unsecured, even for that matter MFI. Now these are the three areas where you've managed to demonstrate excellence by adding new customers and getting a lot of business. But if three high growth categories for AU are going through cyclical downturn, how will you grow?
No. So if you ask me, uh, as of now, also the entire book share of these three book is around less than 10%, right? And we were very sure to communicate to everybody that microfinance for me has certain cap in terms of overall growth, and we need to serve our purpose of doing inclusive banking. So we are not looking to build a very higher business in our MFI. Unsecured loan, business loan or personal loan was largely around our existing depositors. The book is just close to 1,000 crores. Credit card, of course, we started with more hope that it is one of the most important payment method, and because the franchise was new, so we didn't have the ETB, the existing customer base, much. So we have to go through the NTB base, and there the whole downturn happened. We also made certain mistakes. But it's not a very large book, to be honest, Mikun. So I think in this segment, we don't want to grow much unless until we are very sure about our segment, about our policy, about our processes, about our target customer, and then only we want to push our case there. But other than this, 90% book is around secured, where we are working from last 28 years. If you see those book, it is perfect in shape, right? Of course, there is an impact of this slowing economy and all those things, but it is still manageable, right?
I'll be slightly more descriptive with my next question here because I want to bring this point out. One of the hallmarks for EU Small Finance Bank has been the NIMs, net interest margins, which are a function of how you lend and your cost of borrowing.
Correct.
Now, your cost of liability is not the lowest in the industry,
Correct.
but your NIMs are one of the highest in the industry. So if raw material cost is not low, how are you able to maintain that kind of a spread?
So that's the business model we are in. And if you go back and see the history of AU, we remain NBFC for 22 years. And then we got into a banking, right? And so our asset class, still remain those which is unserved and unreached markets where the entire model also want us to be there, right? But we have mastered us in those segments, those products from years now. So we haven't gone into a segment where we have to lend around 10, 11%, right? And there is no way, Nikunj, we can actually manage our cost of money beyond a point because, even the large banks are offering similar kind of rates. And in this scenario, when there is a high interest rate, it's more difficult for us to really push our case in case of going down in terms of cost of money. But, I think that the strength of AU is this, that we can still manage high NIMs because we have the ability to lend secure in those markets where people might feel higher risk, but we have mastered it over the years and we know how to handle in those markets, be it distribution, be it underwriting, be it policy designing, product designing, be it doing your collection. So that business model is very intact. And I strongly believe that if any NBFC can grow in this country, then AU can also grow.
But there seems to be a chatter and a sense, which at least I get from the industry, that the lower end of the strata is struggling because credit is not reaching them. So it's a matter of time you actually will see delinquencies move higher. Now they could hit a bank, they could hit an NBFC, they could hit an NBFC, MFI, we don't know, but that is something which is becoming more like a evolving problem. What are your thoughts on this?
Again, it's a narrative or maybe around some anticipation, but I'm in the industry for last 28 years, and I know cycles happened. Cycles happen due to so many reasons, right? This time people are saying that economy is not doing good, so the lower end of the customer is suffering. But if you ask me, but it is not that beyond my entire calculation or beyond my maths, right? But it might have gone up, by 10 basis, 20 basis. But that's the case would be that, because if you're dealing to a customer which is not having a very proper income flow, this kind of time can give them that tough time. But overall, you have to manage as a lender, right? You to see that, how you manage your NIM, how you manage your entire OPEX, how you manage your collection practices, how you enforce your security, can have a dialogue with the customer. So I think Nikunj, it's not a very straight through solutions. We as a bank has to be more tougher, more resilient, go more detail, take the right actions so that we remain there. But this market is very, I would say, encouraging. India lives there, and the whole objective of AU is to be really serving in those customers, right? So there might be one-off year where my ROE can get suffered, but in a longer run, because if India has to grow to the next level of economy, this customer will become a main customer for us, and we need to be have a patience there to really overcome this temporary challenges and look for a brighter future.
I just want to bring this point out for the benefit of our viewers. The data point will just come up that if one really looks at what Sanjay ji mentioned, the loan book of AU is very well diversified and unsecured is about 10% of the total advances. So this opinion which a lot of market men have that, okay, AU has acquired something in MFI space and that will lead to 2, 3, 4 quarters of bloodbath. I think that's a myth and that's a narrative. Yeah. Data is telling you completely different story, and that's one fact I just want to bring out on the table that yes, MFI business has not taken off the way everybody wanted, but it is so small that it's not going to have a detrimental impact.
So, Nikhil, just want to give you one more data, right? Generally on a normal time, the ROA of an microfinance business can give you around north of 3 to 4%. This year, it might not give us 3 to 4%, but it's still giving us 2% ROA in spite of this whole bloodbath, right? So I think, and 2% ROA in any asset for the bank one is a golden number, right? So I think it's over. We discuss, of course, people don't have to compare us from a very specialized microfinance company because they only have the microfinance book. But my book as of now is around 7% of my total asset, right? Which is still giving me 2% ROA. So, so I'm not overly worried about it because it's more of a loss of profit than anything else.
Which are the areas in which you are looking at lending now? I mean, when I speak to SBI, they are using words like green, clean, renewable. Which are the next high growth areas which AU Small Finance Bank has identified where you want to lend aggressively?
We are well designed our bank, to be very honest. We are working with a lot of, I think, well laid down strategy where we really want to build more retail asset. And retail asset means for us is vehicle finance, which we are doing from last 20, 80 years, right from two-wheeler to trucks. So that industry is also growing well. We are the leader in some market in that segments. We want to grow that book. Our MBL, which is a micro business loan, which is secured. We really want to grow that book. Affordable housing space. We're also now keenly looking towards gold loan because the recent regulation is only helping bank to build more and more. And we're also being very good enough in our MSME and SME space through our commercial banking lending. We're also working on our ED1 license. So I think not much new customer segment will be coming in now because we were not dealing with exporters and importers for the last 7 years. So that offering is also on the card. We're also building a decent liability franchise because it's not easy to take money from customer, right? So we are really working day in, day out to really build a very, I think, acceptable, very trustworthy banking franchise around liability. So I think there's not many things, but we don't want to do anything new, because we have been working on many things in the last 7, 8 years. Time has come in to really consolidate, think through, which is your customer segment, how you want to really operate around it, what should be your policy to get into your bank, and how you want to really service them in a long way, right? So I think I would say that, and I'm saying this statement from last 2, 3 years that bank takes 10 years to really build, right? It's a character which need to be there to really build a bank for long, right? We are just now 8 years. So maybe another 2 years, and then you will see this franchise in a very different different view that we will understand our risk, we will understand which segment we want to be in, how we want to operate. So I think much learning in the last 8 years. Hopefully, we'll want to execute more in next 2 years, and then we become a very formidable force in India to be recognized.
I'll come to the last three questions here, but Sanjay ji, we just had Yashish Dahiya of PB Fintech, and we were discussing the durability of a company, and he said that if a business can get created in 2 or 3 years, that means anybody can create that business. But when a business takes 20 years to create, that means nobody else can create that business. I think that's AU, right? 20 years of NBFC, 10 years of bank. You've got a lot of experience which is difficult to replicate. Isn't that the story which everybody should appreciate? That itna easy nahi hai dhanda karna. It is a difficult business.
I won't say it's a difficult business. It's a business with a lot of patience, It's a business where a lot of endurance has to be there. There would be many mistakes, but you can't do mistake which is, which is not acceptable to any stakeholder. It's fine to do a smaller mistake here and there, but learn from it. Go for long, and once you go for long, you can create a scale, and the scale benefits come. And then, I don't think that there will be any looking back. So I'm very determined that the first 10 years of the bank has to be very noiseless, seamless. We can we can make our mistakes, but learn from it and then go for long.
You've invested a lot in digital. I see your ads on ET now. Thank you for your support. How many of your new customers are now coming via the digital route, where you are not getting them in the branch? You're really acquiring them on your digital platform, because that for me is the success of a digital platform.
So if you ask me, Nikunj, I'm not too gung-ho on digital acquisition, because it's just a small step towards making customer recognize bank, or just small step to say him hello. But I think beyond a point, still a customer require a physical mode where our team member go there, engage with him, explain the product line, explain the bank, then only become a customer of relevance to us. So I think that data is very irrelevant, because we might claim that our new acquisition in customer liability side is around 30% through digital. But I think those customers does not give us anything, to be very honest, right? So I think I would say digital channels are good for service. Once you establish a relationship with the customer, he has a trust on you, then he or she really want to have a digital means to handle their request, right? So our app is actually handling, I think, 99% of customer request or requirement through the digital channels, right? I think that is actually lowering any pressure on our branches. So for me, it's more of a service model, than an acquisition model.
Last but one question, and I'm shamelessly, extending my appointment with you. You are a rare voice, so might as well, just make the most of it. Good banker is someone who says hello to everyone. Anybody walks in, they'll say hello to you. But then they don't say yes to everyone. They say no to a lot of customers who want loan. So what is your loan to acceptance ratio? How many applications do you get? How many do you process? How many do you reject? How is the process?
So I think, because, we run a very diversified book, right from retail to a commercial banking, then we do credit card and not many things. So for every book, the data is different. But to give you a ballpark figure, in retail asset, the login to, I would say, disbursement is around 50%, right? So if 100 customer log in for loans, we disburse 50%. We might be sanctioning around 60%, but ultimate disbursement happens around 50% of our logins. In commercial banking, that ratio is a little high, which is around 70%, because the customer knows that what is the bank policy, and we also know that which customer we really want to be there. So the commercial banking is 70%, but if you want to go to credit card, it's just 10%, right? So microfinance, is about more process, so it may be around 90%, right? So different segment, different book, different approach about log into disbursement.
Question is, again, I'll be descriptive here. The raw material for any bank is capital. Banks raise capital via the open market. So at the current juncture, what is your capital requirement? And since your stock is at a 52-week low, if you have to raise capital whenever, would you be looking at raising at the same level, or you would say, no, whenever I want to raise capital, let the stock go up, then only I'll buy, then only I'll raise capital?
I think we haven't done that way. So whenever we need capital, Nikunj, we need to raise it, irrespective of the share price, because it's a raw material for us, we can't delay it or we can't defer it because we need a very good rate around it. So, and that's not our case. If you go back in my 15-year history, whenever we have required money, whatever price we have got it, we have raised the capital. But as of now, Nikunj, we are around not of 20% in our capital adequacy, largely done by tier one. So I don't think that, AU is raising capital in near future, but I can just assure you that whenever we want, we'll go to the market and whatever price it will be, we will raise.
Well, so nice to have you on ET now. And, for our viewers, it's an absolute treat to hear from you. And I know 2024 was twists and turns, ups and downs. But here's hoping that the way forward for AU Bank and for you personally and for all your employees, it's filled with a lot of abundance, great health, and a lot of joy.
Yeah, thank you, Nikan. But I just want to add on that 1 year in forever bank journey is immaterial. So,
so you're committing that 2025 will be forever. So you're committing to us that 2025 will be a better year than 24 and 2026 will be better than 25?
Yes, I feel so. But in a longer run, this bank will shine. In the longer run, this bank will be a formidable.
If history is anything to grow by, you're growing at 25%, which means every 3 years you will double. So will that run rate continue?
I won't say, let's not be absolute in our commentary, it has to be relative. I would say that the kind of size we are in, the kind of product line we are in, the kind of distribution we are in, in any GDP, it has to be, people say that the financial services grow by 1.5 to 2 times to GDP, but the kind of distribution we have, the kind of size we are in, we might grow by 3 times. So let's see how India GDPs progress. So we need to be relative to around that.
I'm tempted to ask you one more question, and that was not part of the original, syllabus, if I may use that word. Okay. We know that you take a lot of inspiration from HDFC Bank, your connection, your association. HDFC Bank stock price has doubled every 3 years. Correct. 10 years, 10 times, 20 years, 100 times. Correct. Is AU also inspiring to do the same?
I don't know about, honestly, it's not in my hand. My inspiration from HDFC Bank remain around their consistency, their sustainability, their scale, because I got associated with them in 2003, in 20 years, I still see them as my role model because the kind of scale they've gotten, the kind of service they are doing to the Indian private banking, and of course the Indian customers, the kind of approach, transparency they have built over the years, the leadership they have built over the years. I just get mesmerized because I'm also building a bank, right? And I'm go through all those challenges, pains, but whenever I see HDFC Bank, it gives me that inspiration and strength that we can be like this, right? So it's one thing, which is beyond a market price or a wealth creation. People like us, who are self-made businesses, right? We have to got some inspiration from somebody. So I think HDFC Bank is top of the line in that whole story for me.
Well, really appreciate your time. And I'm sure in future course, when we would be discussing the banking sector, just like you were saying that you take inspiration from HDFC Bank, the future generation would say that we take inspiration from AU Small Finance Bank. And hopefully next 5 years, it will not be a Small Finance Bank, it will be AU Finance, AU Bank. So good luck, sir. And thank you for joining us.
Thanks, Nipan. Thanks, Nipan. Sorry. Yeah. Thank you so much.
If you like this video, then like, share and subscribe to ET Now.